crypto markets recover in line with risk assets. On-chain data shows institutions may be buying this dip, and put skew gets crushed as vol supply just keeps on coming. All this and more in this week's Crypto Insight. Okay, so crypto this week. It's been a week of consolidation. Obviously, had a steep sell-off, into the beginning of the week, last week, and then we bounced strongly in line with risk assets. Kind of in, the correlation with risk assets has been holding, as we mentioned, and that was despite some pretty negative headlines out of the likes of Russia, talking about more regulation, and even the US, right? So, we haven't got anything firm on that, but the fact that they're talking about regulating the crypto industry more and more might have been taken badly, but markets were already a bit oversold and were kind of in need of a bit of a reflexive bounce and in line with risk assets. Now, if we look at the chart, you can see, that big level around 39K that was taken out to the downside, that's now going to act as a bit of resistance, right? It's kind of in line with this moving average, kind of back into the middle of the Bollinger Band range. That's going to be your first kind of hurdle. And then maybe around that 42, I think above 42,000, things start to look a lot better, but that's going to be your area of resistance, 39, where we are now, to around 42,000. Okay. And I think it's likely going to contain the market. Again, similar to my thought process on equities not being done yet to the downside, maybe for the next week or two. Again, this looks quite corrective, this bounce, rather than impulsive. After an impulsive move lower like that, if you're going to start a new move up, it needs to be a lot more impulsive than that. This looks corrective, which suggests that the fifth wave of this move down isn't done yet. And so if this does roll over, that target of 30K is still very much in sight. Also, we know the MicroStrategy have been, there's been a lot of people talking about where their net sort of accumulation level is, and it's hovering around that 30K area. Does that level get tested? Does their entry get tested to see, how much pain they can actually take, right? I think that would be quite interesting to see. So that's kind of my base case right now, that crypto's still got a last leg down in it before we can start thinking about some longer term potential bullish bets, okay? Now, if we look at Ethereum, obviously similar story. It broke that key 2,800 area, smashed down to a low of 21 and a bit, bounced back to that key area, right? So we're kind of sitting here just below 28, or actually just around 2,800. So I think that 2,800, 2,900 is your area of resistance. I suspect it fails, just like with Bitcoin, and I suspect we retest to the downside with a potential target of as low as 1,750 if it really wants to get going, right? And we know when this thing wants to move, it can move, okay? So those are the areas to watch out for to the downside. If Ethereum kind of breaks these levels, again, above 3,200 is maybe where you start this downtrend here. If that gets taken out, which is roughly around 3,200, then you start to think, all right, maybe we've seen the local lows there and we can actually build some real sort of upside momentum again, okay? So that's what the two main charts are showing me right now. In terms of on-chain metrics, the futures market pointing out, as we've been saying, negative funding rates, showing a short bias, and we had finally started to see some short liquidations, right? We had seen all the long liquidations on the way down up until then, and then finally a bounce from 33 to 38, 39,000. We are now starting to see short liquidations, right? But funding rates are still in negative territory in the front end of the curve and in the perpetuals. So there is certainly room for more squeezing to be done. Okay, so that's one of the takeaways from the on-chain, right? The other stuff, outflows from exchanges and illiquid supply have been increasing. Illiquid supply being wallets that don't do a lot with their coins, basically. They don't tend to spend their coins and just hodl them for ages, okay? So we've got this metric here, 76.2% of supply is illiquid. So as we've seen the sell-off, the summer sell-off that we saw last year, illiquid supply dropped with it. okay? And it then started to stabilize. The sell-off we've had recently, illiquid supply has just been going up. So all that's saying is short-term holders have been puking, been going into longer-term hands, and they're just going to sit on it for God knows how long, okay? And we're seeing the exchange net position change reflecting that, outflows coming off the exchanges in the face of the market selling off. That is coins being put up in cold storage to be held onto for a long time, most likely. Okay. So that's the other point. And then the last point from the on-chain stuff that kind of stood out to me was this volume breakdown by size. And that is showing that if you look at the percentage of volume that is large transactions over $1 million or even over $10 million, that's actually been rising, okay, or that's been fairly high. And so that suggests that institutions are soaking up this selling pressure, right? That this dip is being bought by institutions and being capitulated by retail and the smaller and the short-term holders, okay? And you're seeing that evidence in that data basically, right? Which is quite a good sign, right? So because we knew that instos wanted to put money to work in crypto. And one of the questions in my crypto outlook at the start of the year was, are these guys just going to chase the market up, or are they going to wait for dips? And it looks like they are being opportunistic, that as the market's dipping, they are starting to allocate, and these big clips are going up in terms of the volume that's being transacted. Okay. So that's what I'm seeing on the on-chain stuff. But in general, if you're getting more and more illiquid supply, and these instos are probably not buying it for like a quick 5-10% turn, right? They're allocating because this thing's got some real upside potential. So that just means when we do finally get a spark, we do finally get a catalyst for the market to turn a bit more positive, then we could see some pretty interesting violent price action to the upside if a lot of the supply has just been taken off. Okay, so that's definitely something to be aware of, and kind of saying that at some point those upside calls are not a good sell, right? You don't want to be overwriting those upside calls if the market's got some real potential to start rallying. But like I said, I feel like technically we're not done yet. We can't really see the catalyst right now that's going to suddenly make everyone super excited about crypto again. And the macro backdrop doesn't look that great. So I think we can afford to wait a little while before piling into a load of calls right now. Yeah. Okay. So now let's look at what's going on in the options market. All right. So we've got realized curves here. BTC realized coming off, as was Ethereum, kind of coming back more in line with implieds. Implieds, as I'd mentioned, have been trading at a bit of a discount. So now realized just kind of come back in line with that as the market's consolidated, right? Now, Bitcoin, you can see that spread is kind of compressed a bit, still realized over, but not by much. You look at Ethereum though, Ethereum realized is still hanging in at around 110, and the implies are more like 70. Okay, so still a pretty big spread between Ethereum realized implied, and I'm calling that the DOV discount. Okay, I'll put that out on my Twitter last week. That's what I think. I think this Ethereum is going to trade cheap quite a lot and quite consistently because there's a load of supply coming in Ethereum Gamma against all these DOV flows. And that's going to give people some nice opportunities to buy Ethereum Gamma as and when they see a move coming, basically, right? So I think that's actually quite a nice environment for vol traders and Gamma traders in the crypto space right now. If we look at term structure, they all collapsed, which shouldn't be a major surprise. Tends to happen after the market's had a big move and then stabilizes. So we went from inversions back to normal contangos. So those pink lines were the current. The blue dotted lines are what it was a week ago. So in a week, pretty dramatic drops across the curve, but obviously the front really taking the brunt of it, as you would tend to expect. And then the bottom charts kind of show us skew. So obviously the left side is Bitcoin, the right side is Ethereum. Those are the term structures. Those are the skews on the bottom. Bitcoin 25 delta skew got as far as 20 vols, as we mentioned last week. It's kind of converged all the way back towards around 5. Puts over still, but massive drawdown in puts relative to where it was. And Ethereum kind of same story, right? Ethereum puts got even more expensive, like around 25 vols in the 1 week stuff, and they've come in as well. So all of those skews kind of converging across maturities and even across the two different assets, Ethereum and Bitcoin, kind of residing somewhere around 2 to 5 vol points premium for puts. So a very slight premium for puts still, but to be fair, they've cheapened up pretty massively, right? And if you kind of haven't got any protection on against your crypto, given the bounce that we've just had and the fact that a fifth wave down is fairly likely, probably not a bad place to be entering some protection type trades, given that the put skew has kind of crumbled in the last week. Yeah. Okay. So that's what I'm seeing in Vol. In terms of the flows, the main flows we're kind of seeing, the standout in Bitcoin was the June 40,000-60,000 call spreads. We saw a bit of that previous sort of few weeks ago. Also seeing that again, someone putting some premium to work for a sort of more longer term bullish bet on Bitcoin. And then we're generally seeing puts and put spreads being bought in the short end of the curve. So taking advantage of the fact that put skew is coming down a bit to start, buying that stuff again. In Ethereum, we tend to see kind of wings being bought. So the 2000 strike puts being bought across expiries. That's probably the, one of the heaviest traded contracts. And then upside calls in the kind of 6,000-7,000 area being bought as well. So people thinking, wanting to own longer dated wing options in Ethereum. Okay. In terms of what I've been doing with my positions, as subscribers will know, I took profit on my Ethereum call ratios. So I had the 23-2600 call ratio expiring this week, this Friday. I was leaning on the fact that the gamma supply was going to come and hit the vol. That managed to make me a 270% return in a week. So I'll take that. Now, the reason I did the call ratio was because I didn't want to kick into long vol on the upside because I knew vol had a lot of downside. And I wasn't so sure we were going to get all the way up to 2,800. And for me, like 2,600 was enough of a bounce, right? So that was my scenario and that was my thinking. The fact that we ended up touching 2,800 yesterday, had you just bought outright calls, you actually would have done okay because the move was so violent from 2,200 to 2,800 to 600-point rally. Even though the vol had a big drawdown, those calls would have multiplied quite well as well. But at the start of yesterday, when the market was still at around 26, 26.50, the call ratio was massively outperforming, right? So that was why I had it, and that was why I was happy to take profit on it as well. And then in terms of, that I took profit on some of my Bitcoin protection when the market was down there at the lows and the put skew was at 20 vols over, starting to kind of scoop in a few more bits of protection again. Now, any puts that were like really low down, kind of rolling them up again in a ratio to kind of just keep whatever premium is in them, but just rolling them up to a higher strike. So I've kind of been doing that. And then I've also stuck on some Solana call ladders as I kind of showcased in my how to trade Solana options video last week. So I've got some Solana 11th of February, 110, 130, 140 call ladders. Reason for doing those call ladders was just because Solana had got beaten up pretty hard, probably more than a lot of the other layer ones. Thought it had a bit of a bounce coming. The upside vol was trading at around 130, 140%. So taking advantage of that expensive upside vol, also knowing that some DOVs are sellers of Solana upside and stuff is probably going to help that vol stay, not go crazy on the upside. So that, again, reason for doing like a long delta short vol trade on the upside, again, leaning on that supply and knowing that that vol was quite expensive, basically, right? So far, those things haven't made or lost me any money. But over the next week, if crypto does rally, which I don't necessarily think it will, but if it does, then those call ladders cost me next to nothing and will give me some reasonable exposure to Solana rallying. And then the last thing to mention is DOVs continued with their selling flows. 4th of February was the maturity of choice. From what I can see, around $150 million of notional traded across Ethereum, Solana, and Bitcoin across all those protocols at Ribbon, Friction, and Theta Nuts. I'm going to work to try and get some data feed on that so I can actually just post like a table of those flows if I can. But right now I'm just kind of scratching together those from various sources. Okay, that's it for me on crypto. Thanks for watching, guys. If you like this content, please subscribe to our channel, give the video a thumbs up, and hit the notification bell so you don't miss out on future videos. To watch the entire macro call, which includes the live Q&A, and a walkthrough of all my top trades, you can sign up for a free trial to Macro Insight. If you join our exclusive trading community, you'll get access to our Telegram group And you'll also get weekly market reports summarizing the macro call. The link is in the description to the video. And for more information, you can connect with us on socials, or you can visit our website, options-insight.com. Thanks a lot.